Welcome everyone from the World Investment Forum to this session on investment in natural capital, where we hope to explore some of the dimension of biodiversity, which is often the other side of the coin, if you will, to climate and climate finance, but often lives in the shadow of climate. So we hope to increase the awareness of what is going on in this space, and understanding of what financial institutions are doing in this space, the opportunities, the risks, to potentially systemic risks to marketplaces, and also what is going on the reporting front and so on. So I don't want to go into too much detail, but we've got an excellent panel with us today. And to moderate this panel is our friend Peter from Planet Tracker. So this is a joint event between the SSE and Planet Tracker, and we look forward to collaborating with them in the future in this space. Peter, the floor is yours.
Thanks very much indeed, Anthony, and welcome everybody to this panel session entitled Sustainable Investment and Natural Capital. Terminology is always a challenge in this area, I think. So from my perspective, I think if we're talking about nature or natural capital, I regard those broadly as synonymous. I think if you're a technician in this area, I'm sure we can sort of parse some difference between those two things. But in terms of the discussion today, I think we'll be sort of talking about nature and natural capital interchangeably. And you'll probably hear the phrase biodiversity thrown around quite a lot as well. Biodiversity clearly a sort of a measure of, if you like, the quality of the natural capital asset that you're looking at, the nature sort of world that you're looking at. And again, I think we should probably regard that as sort of synonymous with what we're talking about. And in essence, what we want to debate today is to have a look at the role of the financial markets and to really begin to sort of dig into a little bit more what can be done to bring the financial markets to a point of greater awareness of the risks to nature, of the risks to natural capital, and also the opportunities that potentially also lie in terms of really embedding nature and natural capital risks into investment processes, and the consequences if we don't. And we're all very aware of the climate debate going on at the moment. And I think one of the things that we would be very keen through this panel discussion is to really bring nature very much to the fore alongside climate, and to think about those two things completely interchangeably. Now, I'm very privileged to have a wonderful group of panelists with me today. So I'll quickly go around the panel, and then maybe they'll be able to say a little bit more about what they're doing individually. But we're delighted to have Stefan Bujnar, the CEO of Euronext Group. We've got Simon Zadek, the chair of Finance for Biodiversity Initiative, Odile Conchou from the UNCBD, the Convention on Biological Diversity, and Siobhan Cleary, who's a senior specialist at the UNSSE, the Sustainable Stock Exchange Initiative. So I'm delighted to have you all with us today. And I guess the question that I wanted to sort of just throw out to the audience at the start is one that's been asked to me a number of times, which is, why do the financial markets need to be concerned about nature? And I was thinking about this as we were preparing for this panel discussion, and it did strike me that's frankly an incredibly stupid question in many ways, and only a group of sort of people embedded into to something as isolated potentially from reality as the financial markets would actually ask the question, why do we need to be concerned about nature? Because quite clearly, if the air that we breathe is not going to sustain life, then we will be amongst the species that become extinct, and that sounds like a fairly negative outcome for humanity globally, but also for each one of us personally. Nature is clearly absolutely essential to our lives and our quality of lives and the quality of the relationships, the quality of the existence that we're able to have. But if you want to put it in a slightly more financial context and perhaps take it away from what might seem a little bit tree-huggy and not very financial markets, just imagine an asset owner who is managing a portfolio for a retirement plan, typical 30-year-old now. Let's imagine they're going to work for another 30 years until they're 60. Well, lo and behold, of course, that will take them right into 2050, which is clearly the target date that we're all talking about from a net zero perspective. So they will just be reaching retirement at the point when we are, in theory, aiming for a planet where the temperature rise has been sort of limited to only 1.5 degrees sort of on average around the place. And we're all agreed that that will be sort of okay, not necessarily as great as it is now, but it won't be disastrous. So we're trying to design a planet where our imaginary retiree is just going to hit retirement when the planet is sort of okay if we all really work hard. Now, of course, that retiree, if they're going to have a good long life in line with sort of upper end of life expectancy, certainly in the developed world, they've got a reasonable chance of living till perhaps 100, and that will take them to 2090. So the 40 years of their retirement will be in the state of the planet in whatever sort of state we manage to get it in by 2050. So suddenly it becomes really important. If as an asset owner, you are designing your portfolio to sort of extract the maximum profit irrespective of climate and nature from your assets right now, you are going to be creating a planet in which your retirement beneficiary will probably not want to live, might even, in the worst case scenario, not be able to live. And that seems a fundamental breach of fiduciary duty. So perhaps that's a slightly more financial markets way of looking at the basic sort of question. So what I'd like to do now is to go around each of the panelists and ask them to describe in a bit more detail some specifics of what they're involved in and how it relates to the financial markets, and essentially what their sort of their ask or their ambition is from financial market actors. So Stefan, perhaps I could start with you. So the Euronext Group, I mean, you've recently announced a commitment to drive solutions that develop the blue economy. And I wondered if you could tell us a bit more about this and maybe why the focus on blue and what you're doing and where you see the path going from here.
Yeah, the idea has always been to embark as many team members and as many stakeholders around this concept of enabling sustainable finance. And what we found as a sort of inclusive concept is the concept of ocean and seas, because the reality of European economies is that the most common factor between all the countries that are part of the Euronext construct is a special relationship with seas and oceans. Actually, you may know that the first companies to be created in the form of a listed company where a company is created to finance boats, to embark into colonial shipping and colonial trade, to bring furs from Canada, and to bring wood from Brazil, and to bring spices from India. And when you look at what has been a significant part of the growth of the countries we operate, it comes from sea and oceans. I mean, Oslo, we operate Oslo Børs, VPS, and Norway is about Oslo and Bergen. We operate the Euronext Amsterdam, which is all about Amsterdam and Rotterdam. Euronext Belgium is all about the development of the port of Antwerp. France is Paris, yes, but it's also Bordeaux, Le Havre, and Marseille. Lisbon is Lisbon and Porto. Italy is Rome and Milan, but it's also Geneva, and etc. And Dublin is in Ireland, when Irish Stock Exchange is Dublin and Cork. Not to mention London, when we have a strong team. So this is the bond, and all the team members, all the stakeholders feel connected by this entry door into sustainable development. And even if people don't necessarily understand the details of the connection between clean oceans and biodiversity and interaction with climate change, they feel good if they embark into actions that are directly related to oceans because of this special relationship. But the reality is also beyond history and sort of psychoanalytic relationship with seas and oceans. You have a reality which is a significant part of the growth of European economies is in aquaculture and fishing, in maritime transports, in renewable energy, in maritime renewable energy, in maritime tourism or coast tourism, and a significant part of the future of the growth of European economies depends on the quality of the sea and the oceans along the line, along the shores. So there is also a vested interest in making sure that all the efforts are activated to protect this component of the European growth. So we have embarked into a project to analyze 162 blue economy companies listed on Euronext, just to create a chorale of relevant companies. They represent no more than 10% of the aggregate market capitalization of the group. But what we have observed is that for most of them, approximately 50% of them, they are somehow more advanced than other companies in terms of commitment of ESG nature, in particular climate change commitments, carbon footprint reductions. So just as if the fact that you make your living by working on seas and oceans creates a stronger appetite or awareness of working for the greater scheme. So that's what we do. Maybe we'll have more time to later on to discuss the type of specific products and initiatives we do, but that's the purpose, and that has translated in Euronext being one of the first signatory of the, if not the first one, on signatory of the UN Global Compact Sustainable Ocean Principles, and also more recently signing the UN Global Compact Blue Board reference paper and contributing to the Blue Bond reference paper. So this is why it is so natural for us.
Thanks, Stéphane. That's really helpful, and it's a really good illustration of, if you think about the blue economy, it's very easy to think about fishing, but actually, as you've highlighted, it's absolutely fundamental to well, a whole trading relationship all around the world, and so many other things as well, including renewable power, of course, where many of our sort of offshore wind farms being sited clearly in the oceans, and also looking at sort of tidal wave power and things like that. So that's really interesting. We'll come back to sort of talk about some of those things a bit more detail as we go through the discussion. But I wanted to sort of link to one thing that you were talking about in terms of the specific companies. You talked about 162 companies with a market cap of 10%. And clearly one of the big debates going on at the moment is the extent to which companies are actually disclosing useful information to investors around their activities and how they are impacting nature and acting in a nature positive or nature negative way. Now, we've seen a lot of disclosure over the years around the climate side of things, and people are now very used to talking about carbon footprint and the path to net zero and what sort of transition pathway your company is on. But I think the disclosure regime around nature is a lot more sort of nascent. And Simon, I wanted to turn to you because I know that you've been very involved in an extremely important project called the Task Force for Nature-Related Financial Disclosures. I always have to think very hard to try and actually remember what the initials stand for. So we've got TCFD on the carbon side, and now we've got TNFD on the nature side. And I wonder if you could sort of tell us a bit more about that project, where it's got to now, and where you think it's actually sort of leading to, and the benefits that we're hoping that will come from it.
Sure, Peter. Thanks very much indeed. And thanks to Planet Tracker, but also to the Sustainable Stock Exchange Initiative and UNCTAD for inviting us to contribute to this panel. So as you say, the TNFD is a bit of a mouthful, but is basically pricing nature in a more systematic way such that corporates or projects can inform the financial community more effectively as to what the implications of nature dependencies and impacts are likely to be when you get around to asset valuation and allocation, which is ultimately the game in play. And the TNFD in some ways kind of builds on the shoulders of the TCFD, but perhaps with a few important differences. And I'll spend a couple of minutes highlighting the differences by way of explaining a little bit as to where TNFD is likely to go in the future. So TNFD is a collection now of 35 market actors, co-chaired by David Craig, who's recently stepped down as the CEO of Refinitiv, and Elizabeth Marema, who of course is the executive director of CBD, which Odile will come on to in a second. So there's the first difference, which is that we have a co-leadership, if you like, from the biodiversity side and from the market. And that's not a nicety, but is in recognition of the complexity of nature compared to the carbon agenda, not the climate agenda, but the carbon agenda, that TCFD is in the main focused on. And secondly, to recognize the importance of interconnecting the way the market functions with broad-based international agreements such as those that are being driven by CBD. And as I said, I'm sure Adil will touch on that in a second. Secondly, our approach to risk is both the same fundamentally, but a little bit different in an important way, in that we include in our framing of risk a broad array of nature dependencies and impacts, with a view that some of those may be material today already, according to our well-versed auditors and lawyers that tend to drive that agenda, but many dependencies and impacts that may not trigger their interest are likely to be material in the future. So just to illustrate the point, if tomorrow the Environment Bill in the UK goes through, which includes a new mandatory due diligence obligation on deforestation for the corporate community, not the financial community, but the corporate community, that will drive a linkage between deforestation impact in supply chains and materiality in financial institutions. So it will overnight shift the relationship in that particular domain of nature between one aspect of impact, irrespective of what the auditors and lawyers think, and how the financial community needs to think about that aspect of their lending and investment strategies. So a broader view of risk that ultimately allows one to build out, as has TCFD, that all-important transition risk pathway. So not just looking today, but looking into the future. The third part of the story, and in a sense I've already made the point, is that it's taken the climate agenda, if you like, 15, 20 years to get into the liability space. And there's a long way to go, but we can already see the rule of law and financial regulation beginning to lock in very quickly and have significant impact in the way in which asset valuations are being progressed. I think that's going to happen with nature much, much more quickly. We see the central banking community coming quickly to the table in beginning to think about the place of biodiversity in the way in which they think about their job. So financial stability, investor probity, efficient and fair markets, transparency, so on and so on and so forth, board capabilities. And that took 10 years for the climate agenda, and it's taken so far 10 months for the nature agenda. And we see a range of different liability aspects for the simple reason that it's never the law, it's not against the law to emit carbon, even though it's wrecking our lives, but it is against the law to wreck a lot of nature. Yeah, and so the basic rule of law will have many additional aspects as it evolves, in particular, that will need to be taken into account. So that, all of which is building on TCFD and the way in which that's evolved, but in a sense, extending also beyond it. Two other pieces, and then I'll hand it back to you, Peter. Firstly, it is the TNFD disclosure, but actually disclosure, whilst by no means over, is only one way in which the financial community learns about risks and opportunities across the business community. And increasingly, in a digital world, it is a reducing importance way of doing so. And so although we are TNFD, in fact, we're having to take account of the high complexity data ecosystem within which we can begin to understand nature, and following the puck to where it's going to be rather than where it is today, imagining what that ecosystem is likely to look like in 5 years or more, where disclosure will be important, of course, and regulated in critical ways, but will only be one source of information for the financial community about nature-related risks and, of course, upside opportunities. And then the final piece I guess I would mention, is that TCFD is not the task force on carbon-related financial disclosure. It is the task force on climate-related financial disclosure, but there has been a very significant focus on the carbon and mitigation agenda, particularly in the construction of 1.5 degree scenarios as a basis for looking at transition risk pathways. I think as TCFD extends and begins to look at the broader array of climate-related issues for the business and financial community, actually becomes more and more about nature. Yeah, and so actually NFD is not simply a complement to TCFD, but there will be really important overlap and integration of their agendas as we move forward. And we need to make sure that that's not in the science space, but is in the way in which we manage as a financial and business community risk itself.
Thank you, Simon. That was a really, really helpful framing of the TNFD. And actually, you touched on some really important broader points as well. I think the point that you made about, it is already illegal to harm nature in some very key respects is a really, really interesting one. And one that I think is perhaps not thought about carefully enough by many financial institutions. Companies operating sort of directly exposed to that tend to think about it quite carefully, at least they should be, and oftentimes they do. But it's something the financial markets have not really thought about as much, and I think that's a really good point. And that other issue, again, we'll come back to this in the discussion, but the gradual coming together of these sort of two sides of what is essentially the same debate. How do we actually manage our economy in a way that makes our planet sort of great for us all to live in, rather than just somewhere where we're surviving in our sort of very expensive climate managed bubbles? That's a really important issue to see those two things coming together. Adil, if I can turn to you, and Simon mentioned already the very strong link between the CBD and the TNFD, and clearly this sort of issue of biodiversity. So now we need to sort of, again, narrow down the terminology, and perhaps you could explain a little bit more about what it is that you're doing with the Convention on Biological Diversity, and how you really want that to impact the financial markets, and maybe explain why your part of the organization has been so keen to be involved in TNFD as well. It would be really helpful.
Thank you, Peter, and thank you also to invite me to participate to this really interesting panel and discussion today. So I'm part of the CBD, Secretariat of the CBD, Convention on Biological Diversity, as you said, and the Secretariat of the CBD is in charge of organizing and the COP15 in China. The COP15 in China, we had the first part last week, and we'll have the second part in April, May next year because of the COVID crisis. Everything has been postponed. But what is important to say is that the COP15 in China is as important as the COP21 for climate wars, because it will define the next framework, the post-2020 global biodiversity framework that will be hopefully adopted in next year, and that will be as important and equivalent of the Paris Agreement adopted some years ago for climate. So it's really a huge and important step in terms of biodiversity. We say perhaps more biodiversity on the CBD side, but biodiversity and nature are mixed. So it's an important moment because it will define this framework for the next 10 years, and it has to be defined closely and linked with the climate also work, and with COP26 arriving in 2 weeks now. And why is it important for the financial sector? It's become first of all, that's a global overarching policy. And secondly, once adopted, it will be translated into policies, regulation at regional and national levels. And that means that it will have direct consequences on the operation of companies and financial entities. Look at what happened lastly in France with Article 29, very famous one on the energy law, requiring companies and financial institutions to disclose what they are, report and disclose what they are doing in terms of biodiversity, without concretely having the good methodology now on the table to do that. But that's a challenge that they decided to do. So imagine every country is doing the same because of the GBF and the translation in their national policies, and the financial sector will understand very quick that they have to do that. Which is important also to say is that this GBF requires, or will require also, and certainly, the revision of the NBSAPs. NBSAPs, that's the equivalent of NDCs for climate, so the national, concretely the national strategy on biodiversity, and they should be supported by national biodiversity financial plan, how to finance the biodiversity locally. And what would be and will be absolutely important is that it will be developed by the ministries of environment, sure, but with other ministries, including the ministries of finance, and also with external partners as local financial institutions, and why not international ones, because in a lot of countries, and above all in developing countries, they are really important. And that's what we are pushing. And also pushing these ideas of the fact that all financial flows should be aligned with that. So for that, we are now working closely with the financial sector, which is, I have to say, quite new at the CBD. That wasn't the case before. And as several actors, and Elisabeth Bremer the first says, we have to build on our heroes, if I can say, and to work with all the partners involved in this biodiversity crisis. And the financial sector has really, really an important role to play, because if I can say things as they are, financial sector is financing everyone and the business, the government, local entities, and so on, and has a real power to make things change. Before CBD, I was working in a public development bank, the French one, and yes, that's true. You have the power to make things evolve when you are providing money to the others. So that's the role of the financial institutions in helping and pushing their client to evolve and to make this necessary ecological transition is absolutely huge. And they have also to make this internally this transition. So that's why we are now working with the financial sector in order to push and to support them to be part of this process first of the definition and design of the GBF. And we are really, really happy to see some group of financial institutions being observers in these events and able to speak. That wasn't the case before. And also thinking about how to implement. And there has been a lot of commitments made last week as the first part of the COP15 in China from for example, Finance for Biodiversity Pledge, now 75 financial institutions, and also the creation of 2 other groups of financial institutions, either Chinese one or with also international other banks. So we see that it's really evolving alongside what the business is doing, perhaps for a more longer time. I would just, regarding your question, why is it important for us? And perhaps before I forget, yes, this work with the financial sector, a lot of working groups and so on, make us come to the TNFD. We and Elisabeth Bremer was asked to co-chair that, and it has been really seen as a wonderful link between what the CBD is doing with this global framework and the way to implement and achieve that with the financial sector, mainly the private financial sector, because that's the aim of the TNFD, but also it will be linked with the public financial sector with a specific hub internally in the TNFD. So that's a real wonderful way to link these two sides of the coin, as you said. Perhaps if I may come back to why it's important for the financial sector, I would say something has to be really clear. Nature or biodiversity, it's not only about plants, animals, and so why would a bank protect a panda, for example? That's really nice. But finally, as you said in the introduction, the problem is perhaps not there. The problem, it's about people, and it's about our need for food security, medicine, fresh air, pure water, carbon sequestration, coastal protection, and so on and so on. That means the ecosystem services that are provided for free now to us by ecosystems such as a normal marsh, wetlands, coral reef, forest, agrosystems also, and that has to be understood. They are providing us services which are free, we consider them on the ecological side as natural infrastructures, developing services for us, and they are named, as you said, in the financial world as assets, natural assets or natural capital assets, as you said in the opening. And that is why it's important, because of the services provided to us, because of the value also that they have. It has been estimated by OECD as 125 trillion per year, 1.5 times global GDP. So I think with such figures, there are a lot, but it's easy to understand the value and the importance for the economy of these services provided by nature. And if they collapse, businesses and financial institutions will be bad, if I may say that. So that's perhaps the most important things to understand and to deal with, how to protect and how to finance either the protection, the restoration, or new project positive with biodiversity, which is more or less, and it can be through managing the risks or through financing new project positive for biodiversity, which is what is behind this concept of aligning flows, the same concept that was used in the Paris Agreement. And I won't come back to all the risk faced by the financial institutions, because I think Simon developed that very well, and it's not useful to come back to that. Perhaps just to say that you have the risk side, but you have also the opportunity side, which is for a financial institution quite interesting. I was just before that in another event dedicated to the insurance, and that's amazing to see what the insurance sector is now developing to insure, you know, elephants because they are fighting with people, to insure wetlands, marshes. You couldn't imagine that. And also for us, people from the biodiversity side, that an insurance company would insure a march, a simple march, because of its role against flood in the future. And that's really an impressive progress, and it gives us a lot of hope. Thank you.
Thanks, Odile. That's a fantastic sort of introduction to the topic, and a really clear presentation as to just how integrated finance is already becoming in the whole CBD biodiversity effort and the framework of COP15, which I think is fantastically exciting, because as sort of Simon was alluding to earlier, it's taken a lot longer for the sort of the climate debate really to get traction in the financial markets. And I think it's very exciting to see a much more rapid sort of pace of integration between the sort of if you like, the scientists and the people who understand planetary ecosystems, and then on the other side, the people who are actually pumping money into the economy and have the power to sort of do great good or to do great harm. But of course, part of that is companies themselves and financial institutions having things that they can measure and having targets. And it's often said, if you can't sort of measure it, you can't manage it. And certainly my experience of working with financial institutions is they love data, and they love measuring things, and they love targets. Not always in the best way, but it's pretty essential to the function of any financial institution. And Siobhan, that's something that you're sort of deeply involved in, I think, in terms of the Science-Based Targets Network. And I wondered if you could sort of expand on that a bit and tell us a little bit more about the work that's going on there, and how that sort of meshes with what the other panelists have already discussed.
Sure. Thanks, Peter. And thank you, Anthony and UNCTAD, for having us today. So I guess the Science-Based Targets Network is another piece of the puzzle that we're busy building out here, which is that firstly, as an organization, we're a collection of more than 50 global NGOs, scientists, sustainability experts, mission-driven organizations. And really what we're trying to do is develop the tools, methods, and guidance that companies and cities can use to set science-based targets. And by science-based targets, we mean targets that ensure that their activities remain within planetary boundaries and the concept of a just and equitable corridor. So really what we're saying is that it's not enough. I think what we've learned from the work of organizations like the Science-Based Targets Initiative is that, you know, historically people would sort of set targets, but they weren't necessarily anchored to anything meaningful. And where we are now is a sort of an appreciation of the fact that in many of the areas we're operating in the nature space and in the climate space, though climate arguably is part of nature, we understand that there are limits beyond which we cannot go. And so how do we take that understanding of those limits and then translate that into something that individual actors can take meaningful action on? And that's essentially what the Science Based Targets Network is in the process of developing. The work is underway. It's not complete yet, but it is, and my scientist colleagues tell me it will never be complete in some ways. It is always evolving. I choose to ignore that and focus on the things we can do now. But we've already identified, for example, a number of interim targets, things that companies can already do now that set us on the right path, that are directionally correct. Obviously, setting a science-based climate target is one of those things that companies can do now, which is relevant in the context of nature as well. But there are other nature-related targets in relation to land use, in relation to water use, in relation to ecosystems that companies can also set now. How this overlaps with some of the other initiatives or intersects with some of the other initiatives we've already spoken about. Obviously, the CBD and the outputs of the CBD process are critical input into the definition of the boundaries and the operating boundaries. So, in the process of designing the work that we're doing at the moment, we're also having to make sure that we build in the expectations of what will come out of the process next year. We are also obviously looking to work very closely with the TNFD, because whilst we are focused, our primary sort of proposition is the setting of targets, the enabling of action. In order to disclose and in order to set targets, you need to be able to measure and understand your impacts. You need to be able to prioritize where you're going to take action. And regardless of whether you're reporting for TNFD purposes or reporting to enable people to monitor and verify that your science-based target is in fact a science-based target and that you are making progress against it, there are reporting components associated with both. And so obviously we want to ensure that we build on one another's work, we accelerate where it makes sense to do so, we align where it makes sense to do so, and collectively we drive action as rapidly as possible, because actually we're probably starting a few years late in terms of really moving as quickly as we need to do. In relation to the sort of role of the finance sector, as I've said, our primary focus at the moment is target setting for companies and cities, so real economy actors as you were. But we see the finance sector as being absolutely critical as a lever for driving change. And so really what we want to get to is a point where the finance community understands that companies setting science-based targets is our best chance of getting to a livable world in 50 years' time, 30 years' time, rather than one which is not livable. So the best a business case for not pushing us over the edge. So our focus with the finance community at the moment is really ensuring that they understand what the tools and methods are, but really helping them get to a point where they understand what good and credible action looks like in this area. And that's the work that we're doing with the finance community at the moment. I'll leave it there.
Thanks, Siobhan. That's really, really helpful, and actually sort of lines up with the next question that I was going to ask to the panel generally. And you mentioned, the fundamental sort of focus of helping financial markets to understand what sort of good and credible actions actually look like, which is a great way of framing it. And the question I was going to throw open to all of my fellow panelists is a very simple one, really. What do we need to do? What do we need to do to mobilize the financial sector to take action on nature? So I think Siobhan has already set out a sort of part of that, but I wondered whether others on the panel had ideas around what is it that we need to do going forward. We've discussed some of the sort of the key initiatives that you're all involved in, but are there particular things that we could be doing that would sort of really move things on? Simon, you're already waving a hand. Please jump in, but everybody else do join.
Oh, I didn't even notice that. I was just playing with the buttons. Okay, so a couple of things from my and our side. So let's start with the data and the communication. So there is a narrative emerging around nature that it's too complicated for now, so people should wait. And I can assure you, nothing can be further from the truth. Yeah, that there is absolutely no reason why any and every FI should not do a portfolio-wide nature stress test and to report on it, least of all to their board, most of all to the broader public and community. A top-down approach can suffice to kick off with in looking at sensitive sectors and jurisdictions that struggle to protect nature, and that will immediately draw out the hotspots even without any project level data whatsoever. And so I think the starting point is right there, which is it can be done tomorrow. It really doesn't take that long. F4B has demonstrated with existing publicly available data sets that one can get a first cut that's a good start. And really we need to see more progress on that. So that would be number one. Number two, staying with TNFD for a second, one of the other slightly interesting pieces about TNFD is whereas TCFD took 9 months to bring out a consultation draft, we will issue a beta framework within 100 days. Yeah, and the reason for that is because we see the need to get into the market quickly for prototyping and experimentation, piloting to be done with a sort of first generation framework. And we see instead of modeling TNFD as a standards organization that sort of a year in will do something and then later on will do something else, actually think of it more as a sort of open source software model, yeah, where we put something out for prototyping. Yeah, we issue guidances, patches, more information as we go, and then crowd back in experience at scale based on how people are using it. That's on the data and disclosure side. And then I would just make perhaps one final observation, which is nature is complex, it influences everything. As you said, Peter, if it goes away, we all go away. In fact, we are nature. However, just as energy is critical to climate and carbon, food is critical to nature. It's not the only sector of importance, but it's an $8 trillion part of a 90 trillion global economy, with an estimated by the World Bank $12 trillion a year worth of negative externalities, a major part of which is nature impacts. Yeah, and so we should hunker down on food, and we should really focus on how the transformation in food is going to happen in a way that is rapid, but is not disruptive, since it's one thing to disrupt a coal-fired power station, but quite another thing to disrupt a global food chain. And so we should really think about this through a sector lens, as well as through a sort of broader nature and global economy lens, because an awful lot can be done in that, albeit very large, but narrower initial perspective. Thank you.
That's really helpful. Yeah, no, I completely agree with those points. I think your point about food is a really, really interesting one, actually. And as you say, one does need to be quite careful about the disruption that takes place in something as fundamental as that. Stefan, I wanted to just sort of, direct the question a little bit more to you, if I may. And in terms of financial institutions and indeed the companies themselves operating in the financial markets, clearly the stock exchange on which they list, or the stock exchanges on which they list, are pretty fundamental in terms of driving requirements for disclosure, regulating the behavior of companies and the participants in the market. I mean, what is it that Euronext is doing, and what do you think that other sort of stock exchanges should be doing?
Yeah, maybe before answering precisely your question, Euronext, a few comments on what have been said before. The reason why we at Euronext are a strong believer of this commitment to biodiversity as nature is not because we have a special relationship with polar bears. It's because we believe that this is the most powerful gateway or entry point to the wider commitment to global warming and to climate change. It's just that the reality is that this is the only gateway to deliver tangible proof that responsible behavior is a must do, just because none of us on this call has ever touched climate change consequences. You have to believe in science. You have to feel that it's hotter than usually. You have to feel that the confusion on seasons not being what they used to be are there. But it's global, it's average, it's blended, it's far away. You don't touch it. Whereas in our lifetime, in our local environment, you can touch and feel and have a direct perception of biodiversity erosion. Therefore, embarking people into something they feel, they can touch, they can conclude that it's true, is the best way to prompt personal change in behaviors, collective change of attitudes and behaviors. And it's a very powerful tool. And that's why we are committed to that, because I would have never been able to embark all the Euronext teams on a sort of conceptual climate change, which has some aspects of a religious belief, although extremely well documented by science. Whereas you can embark people into a special relationship with improving the environment of the water space next door. The second point I want to highlight about what has just been said is about what finance can do, what we need to do. I don't know whether finance is good or is bad, but what I know is that finance is a very, very powerful, probably one of the most powerful tool in the planet to send or share a lot of information very quickly, very far away to many people. And that's power. This power of dissemination of collective preferences is something which is really embedded in finance. Finance for the past 5,000 years or trade or exchanges are a way to crystallize collective preferences. And in this respect, this is what probably one of the most powerful. Actually, the transformation on ESG for the past 18 months, where things have massively accelerated, can be dated at the beginning of 2020, when BlackRock, one of the largest, if not the largest, asset manager in the planet, decided to commit that 100% of their funds will be ESG compliant by the end of 2021. And Amundi, which is the largest asset manager in Europe, did the same few days before. So when those guys commit to such things, that has huge ramifications immediately. So among the things that are needed, to take your previous questions, I think there are three things that are very, very important and very powerful. The first one is the harmonization of standards. What people complain about, it's not, we don't have time to touch that, but it's clearly the sort of confusion that is created by the fact, because these standards are by essence political, they are non-financial standards, therefore if they are not financial, they are political. The way they are structured is never neutral. So the reluctance to have a bunch of accountants, albeit very smart and experienced, sitting in a glass tower and deciding what is green, what is brown, what is nature, what is culture, is a bit weird. And we welcome any initiatives taken by proper politically driven international organizations that are governed by people who are elected by citizens as the right type of framework to do it. The second part is that in the pure accounting world, maybe efforts can be further developed, because I believe that they are not really significant enough on the accounting front, to better price scarcity. Because what we are talking about is pricing of scarcity. And pricing the scarcity of assets for which there is no market is probably the most complicated thing to do. And work has started obviously with carbon pricing, etc. But if we want nature to become as powerful as carbon footprint, I mean, some tools must be developed to price it. Maybe I'm pushing open doors and I'm ignorant. So if it is the case, I apologize, because efforts have been done, but at least it did not reach the desk of companies. And the final point, which is not a small point, is to make sure that companies in transition companies that are not where they should be, but are doing what needs to be done to be there, are recognized for their best efforts, because otherwise you can't capture for ESG or for nature a group of companies. You can capture the GDP in 10 years on the basis of companies of today. Otherwise, there will be no success because there will be no liquidity. If you have this very small group of companies, who is going to invest in this very small group of unliquid companies? You need to find a way to bridge the gap with a sufficient large universe for investment, including the ones that are making the best, which is then moving into a very ambiguous judgment call. The final point on what we do at Euronext, but I wanted to keep the advertising part short. We believe that we should do what exchanges do for a few hundred years, which is to provide visibility and transparency. We make companies that are making the relevant effort more visible, because investors, for 300 or 400 years, what we do is that we fix the problems of the people who have too much money and are looking for ideas to invest because they want yield. So these are investors. And to fix the problem of the people who don't have enough money, who are the people with ideas but no resources. So for years and years and years, people wanted yield, capital gains, liquidity, performance. Now they tell us we want yield, capital gains, preferences, but also we want a contribution to the environment, a contribution to society, and a transparent and diverse governance. So show us projects that do that. And the companies that do that tell us, what should we do to be more visible to the ones who are bringing money? And that's a very fundamental point. For years, for the past, let's say 10 years, ESG and tomorrow to a larger extent nature investment was a way to diversify your investor base, to approach, to address. Now it's not anymore a question of diversifying your investor base. It's a question of keeping your existing investors, because your investors have moved from ESG equal nice to have to ESG equal must have. And that has changed completely the view. So what we do, we are the global leader in ESG bonds, and in particular out of Dublin, the ESG bond segment and the commitment for the UN Global Compact Blue Bond Reference Paper is a very important part in this respect. We are doing a lot in terms of ESG indices, because the indices are the best way to convey market information and to identify synthetic group of companies. Actually, 80% of all the indices we have released last year and the previous year are ESG-driven indices. And we spend a lot of time in financial literacy, and we have a joint venture with a partnership with GA Europe to help kids in high schools across Europe to build blue economy type of projects, and so on and so forth. So I think we can do a lot, but just by using the fundamental pillars and engines of finance. That's why Euronext is so committed to that transformation of capitalism, because at the end of the day, there are two words that none of us has learned at university or has heard at university. When at least when I was young and slim at university, the first one is negative interest rates, and the other one is ESG. I mean, none of us 20 or 30 years ago, for the old men on this call, had even thought that we would be one day spending time discussing what we can do to protect nature. That was for others, not for us. And this is the probably most fundamental transformation of capitalism, and it is to last. And that's that. And finance has always been a very, very powerful to implement transformation of market economy. I mean, the only alternative option is if we all move to an administrated economy, and then we not only we have no job, and then all the discussion is becoming pointless. But as long as we believe that this is the best way to allocate resources to collective preferences, that will be the most powerful vector to implement those transformations.
That's really, really helpful. Thank you, Stefan. And I thought your an analogy that actually nature is a real gateway into understanding climate was a really interesting one, and I think it's very, very true. As you say, climate can seem a little bit esoteric, but nature is absolutely happening all around us, and if we paying attention to what's going on locally, then potentially we can see changes, both good ones and bad ones. And Siobhan, Odile, I wanted to sort of throw it over to you. I don't know whether either of you wants to add anything to what we've been discussing so far in terms of really motivating the financial sector to take action, whether from either of your perspectives there's anything that we should be thinking about in the near term, maybe.
Perhaps just some words, because a lot have been said. I would like just to say that when I was young, I was still working on ecology, and so that was also the case. But I really, and that was not so clear in the perhaps ecological world that the finance could have a role. I always thought that it could be the case, and always push in different type of companies where I worked. And now to see both together, that's really, really, really good, because I completely agree with Stefan. And as I said also in the introduction, the financial sector has a real power to make things evolve. So a lot have been said. I would say there is perhaps a difference between the pioneers that we hear today and that we very often hear, and a lot of financial institutions in other parts of the world, which perhaps have less knowledge of what they can do. Not a question of willingness, but a question of feasibility and implementation. We receive calls very often saying, well, we would like to, but what can we do? So as it was said before, but the power of examples and peer exchanges and so on is really important, not only in events, but concretely on the ground, what can be done. And the partnerships also. When we look carefully at perhaps the pioneers here in Europe and in other countries, very often they are working with NGOs, with scientists and so on, explaining first what it is, biodiversity, what we are trying to do, and not only what it is, but how they can deal with that, what they can finance, where is there a market or not, because that's mainly the market first, and the risk also, and that has to be explained perhaps more, and such partnership can also be interesting, and that's a way also to link these different worlds. It's not easy. They don't speak the same language. Very often they don't understand each other. We saw that with CBD negotiators, but nevertheless, that's one of the key of the success also, to work together. So a need of a global framework is absolutely important, to know where we have to go all. And it's sure that we want surely not have the 1.5 degree for biodiversities. We can think it's a pity because the financial sector is asking for that. But nevertheless, it will give some perhaps 2, 3, 4 goals and the good, hopefully, direction where to go. We need, if I come back to the GBF, and to push also and mobilize the financial sector, to have perhaps more references in the global biodiversity framework and clear references to the financial sector and to what they can do. It's perhaps not completely the case now, but it's not finished. So there are some references, but it has to be clear. It's drafted with the words of the ecological community and not the financial ones. And so partnership examples, global framework accessible to the financial community. And I would say also the link, when I think above all to the developing countries, the link to the social issues and climate, sure. Climate, that's sure, for the financial community, but to not forget the social issues with this idea of development, to not make this opposition that we so often hear. Yes, okay, but we have poor people, we have to look at them, and biodiversity is after that. And it's not true. It's not true because it's completely linked, and the poorest population suffer much more than the others of the loss of biodiversity. So in the way to think about it also, and with the examples both and with climate have to be linked also. And
that's really helpful.
Yeah, I want to speak again of data, targets, metrics, and so on, because and taxonomy and all the need of tools and so on. Everyone is saying that. Thank you.
Yeah, thank you. No, that's really helpful. Siobhan, we've got sort of literally a minute or so left, but I did want to give you the final word. So what would you like to add to what's already been said?
Well, I think what I'd like to do is pick out the sort of key messages which I heard coming out, which is that there are already things that the finance sector can start doing. So there is action they can start taking now. They can already start to understand their exposures, their portfolio exposures, and therefore the impacts that they are currently financing, even if it's somewhat messy. They can already start to engage companies on directionally correct actions that companies could and should be taking. So the interim targets that I spoke of earlier. And there are any number of convening organizations that are providing the finance community with opportunities to learn from one another about how best to get to grips with this issue. So UNPRI, UN Principles for Responsible Banking, UN Principles for Sustainable Insurance, the Finance for Biodiversity Foundation, the Finance for Biodiversity Initiative is doing a great deal of work on understanding various transition risk pathways and providing frameworks for thinking about these things. There is absolutely no excuse for a finance institution not to start taking action on this now.
Thank you. Yeah, that's a very good summary of our discussion, and I think that the fact that yes, it may be difficult, but actually it's very urgent and really important for financial institutions to engage in right at this very moment is absolutely key. It's been fantastic to be able to be part of such an erudite discussion. Thank you so much to all my panelists. You've contributed a huge amount, and it will be really, really good to go back and sort of listen again to some of the points that have been made. But I think the fact that, as you were saying, Stefan, that it's really understanding that local impact and getting that sort of tangible experience of what's going on can be a tremendous way to then expand that across the whole financial markets. And as Simon and Nadia were both sort of illustrating the fact that it's within financial institutions' grasp to do things now in terms of some measurement, some use of science-based sort of targets is good enough to examine whether you are actively causing harm or funding harm, or whether actually the way that you're allocating your capital and indeed engaging with companies and fulfilling your so important stewardship obligations. That is also absolutely essential and clearly a key part of the path going forward. So once again, thank you very much indeed to all my panelists. Thanks, Anthony, for sort of getting this together and facilitating this event. It's been a privilege to be part of it. And thank you so much for all the work that you're doing, and the very best of luck with each and every one of your endeavors going forward. Anthony, thank you.
Thank you, Peter, for moderating the session, and thank you to all the speakers for joining us today. A lot of issues were raised today that we look forward to following up with you in the future. And so this concludes this session, but thank you all for tuning in. And again, thank you to all our speakers for joining.
Thank you all.
Bye.
Thank you. Bye-bye.
Thank you. Bye.